How would you like to have a tax-free retirement plan that had no market risk, guaranteed rates of return, that also you could use at any age for any reason? Stay tuned in this video and you'll find out. For the best information on the infinite banking concept, becoming your own bank, savings, and growing a tax-free retirement account, subscribe to my channel and make sure that you click the bell so that way you'll be alerted when I upload new videos every week. In this video, you'll learn how to use infinite family banking to have tax-free retirement funds, guaranteed rates of return with no market risks that you can receive at any age for any reason. That's before age 59 and a half and even after age 72 without the government telling you what to do with your money. Warren Buffett's first rule for money is never to lose money. And his second rule is never forget rule number one. So if Warren Buffett's number one most important piece of advice that he can give people about money is to make sure you don't lose what you have, how important do you think it is for you to have your retirement funds in a vehicle that never loses money? And since we're referring to how this system can be utilized for retirement, the longer you keep money in something that gains compounded interest, the more money you're going to have. If you've seen or listened to the Rich Dad, Poor Dad radio show with Robert Kiyosaki, you've probably heard about him talking about the mismanagement of pensions. The corruption that's taken place over in France, where you'll see the rioting and the violence, where the uprising of the workers through the Yellow Vest movement, isn't isolated just to France. A pension isn't necessarily a guarantee that you're going to receive the exact amount without risks. In the comment section below, let me know if you have a pension from a previous employer or a current employer. If you're in the situation where you have not started receiving your funds of your pension and it's from a previous employer, contact me immediately. You do have a lot of options and things that you can do without having any tax implications on that money today. Pause this video and comment below on what you think taxes will be in the future. Do you think taxes are going to be the same? Do you think they're going to go up, or do you think they're going down by the time you get to retirement age? Do you think that taxes are going to be greater in the future? If you look at how much money the federal government is in debt every single year, trillions and trillions of dollars, and we look at the baby boomers and the cost of health care. When are you going to be able to retire, and when is the government be able to fund and take care of all this through Social Security? Because we know people are living longer, which is a good thing, right? So if you're like many people and you feel that taxes are probably going to be higher in the future, then a Roth IRA or a program through infinite family banking utilizing the banking concept would be more preferred. So let's look at the downside of a Roth IRA and why it's preferred for a banking concept. Well, even when you put money into a Roth IRA, you're still subject to 59 and a half if you want to take those funds out. So it's almost a penalty for those who have worked very hard and become very financially successful, put their money away for retirement, and they can't really get their hands on it without the government saying, no, we're going to penalize you. So speak to your tax accountant depending on your particular situation. Find out how much that would cost you if you did or had to take the money out. So when you utilize an infinite banking policy or utilize the infinite banking concept, it's the concept of using a high cash value, low commissioned, permanent whole life insurance policy as a bucket or a place, a storage facility, if you will, to hold your money. So why would somebody use that when referring it to a retirement program? It's not for the death benefit. Most people, and for ages, Insurance policies, specifically whole life, has been focused on the death benefit and why you would need that death benefit. Well, when we utilize the banking concept, what we're using is using it as a storage facility so that retirement, we have all of that time from beginning of putting the money in, funding it monthly, like most people do, through automatic withdrawals out of their checking or savings account. So that way you're paying yourself first. When you put your money in a 401k or Roth IRA, you're really not paying yourself first. You're paying the fund managers first. The fund managers get paid today, and you get paid when and how much. The fund managers know exactly how much cash, liquid, that's going in their pockets because they're the ones, or the people who are managing the funds determine that, not you. Now, if you're putting your money out of your paycheck or in your investments, whether it's a Roth or any other retirement account, how much money are you going to have in the future? Well, we really don't know that. So it's really easy for somebody who sells their services for stocks, bonds, or mutual funds to say not to worry about risk, you're in it for the long haul, because it's not their money. They're not the ones who traded their time, energy, efforts, or provided value in the marketplace through their services, their goods, through running a business, or the schooling and knowledge they took to build up a professional practice, because they're going to get paid when? Today. Are you going to determine how much money is going in their pocket? Not really up to you. How much money are you going to get in return? You really don't know. And how long are you going to have to let it sit there if there is a fluctuation in the marketplace, if there is a market downturn? None of us have a crystal ball and know when the downturn is going to happen, and none of us have a crystal ball to know exactly what it's going to be when we're already in retirement. So that's why a lot of people like the peace of mind and the concept of knowing, if I put X amount of money into my banking policy every month with all the other advantages I get, I know exactly how much money I'm going to have at whatever year, at whatever point or time in the future. Now, if you ever need to borrow money against yourself, unlike a 401k or an IRA, when you disturb the compound interest by taking loans against it, you can actually borrow against that money, and the money still stays in your account, compounding interest. So no matter what challenges run into you in your family or your business or your professional practice, you're always going to be able to know how much money you're going to have in the future for proper planning. According to the National Bureau of Economic Research, the last 100 years, the United States has had a recession every 4 years and 2 months on average. The longest time that we've gone without having a recession is 8 years and 10 months, so almost 9 years. How long has it been since June of 2009? Well, it's been more than twice the 4 years and 2 months. That begs the question, when is the next recession going to take place? But for the purpose of this conversation, we're talking about how can you utilize this for retirement. During retirement, your income is coming from where? Either Social Security or your investments and savings retirement, correct? So if you're taking money out of your 401k or whatever investment vehicle you had, and it's coming from something in the stock market, and the average recession is 9 months, you're cashing in on your stocks, mutual funds, or other investments when the prices are low. What do they say? You're supposed to buy low and sell high. Well, when you're cashing in your money on your retirement and it's at a low point, you're actually locking in your losses and taking much less than what you actually had when you retired. So in many cases, if the market does go down and you have a banking policy, you don't have to cash in your losses. You can take funds from your banking system because you know it's at a guaranteed rate to get you through that 9-month on average time frame during your retirement years. Let me ask you this question. How many people in retirement years can go 9 months without taking money out of the stock market or their investment portfolio in order to live? Probably not very many. That's part of the money that you had planned and set aside for income. So that's another reason why people like the peace of mind of having funds in an infinite family banking policy. They have funds so that when they're at retirement and the stock market goes down during a recession or a depression, that you're not taking money out from stocks, bonds, mutual funds, or wherever you had investment when the stock market's at its low point. You don't want to sell your stocks when they're low. You want to sell them when you're high. So if you can live off the income that you have set aside in your guaranteed banking policy, you can wait until the stock market comes back to where it was when you started, or actually gain. Isn't that what they call it? Saving for the long haul or investing for the long haul. But if you're locked into your money being in the stock market, then you're guaranteed that somewhere along the lines, if you're going to be retired for more than an average of 4 years and 2 months of retirement, which we all hope that we don't die within 4 years and 2 months of retirement, you're going to be taking funds out of your stock portfolio when the stocks are low rather than high. Another added advantage with a banking policy is if you were to pass away after you depleted a portion of those funds, all of those funds go tax-free, not just to your spouse if you're married, but also to your trust, your charity of choice, or your children. That's not necessarily the case when you talk about death and you've got 401k that is being passed on to your children. You're going to have to talk, or they're going to have to talk to the CPA and tax advisors they have at that time on what they're going to do and how that's going to affect them. Because Uncle Sam is going to get that tax dollars from anything that's in a qualified retirement account like a 401k. So another added advantage that people like how they can use it is they can use it for any reason. What if you're somebody who wants to retire early? If someone's only 50 or 52, 54 years of age, and they've done a really good job saving, investing money, staying debt-free, which we can actually help you if you're in that situation of how do I get out of debt so I can save more money for retirement. In the link in the description below, I can actually go through a special webinar that you're going to be able to see, and I'll be able to have a consultation with you to personally get a game plan written to take you from point A to point B and know exactly where you're going to be financially if we're referring this for retirement. So how would that make you feel if you knew exactly how much money you had for retirement today? In the comment section below, put in there if you've known anybody that had a pension and something happened to that. Maybe it was something through the automotive industry or the logging industry. There's been a lot of industries that there's a concern, are they going to have pension cutbacks? If you were in the steel industry and you worked in the Midwest, or you worked possibly in the coal mining industry, depending on what you do and how it's funded, you want to be of a concern on what that pension's actually going to bring you. When people are actually counting on an amount that they're going to get as a guarantee every month for the rest of their life, that's a concern. If you have an old pension from a organization or company that you no longer work with, and you want to have my advice and look at your situation on how you can put this into some type of a banking policy or utilize those funds in some way, click the link in the description below for my webinar, and you'll have an opportunity to contact me where I'll be able to go over that information. If this video provided value to you and gave you options or considerations on how you could have a guaranteed rate of return with no fluctuation with the marketplace, that you know today how much money you're going to have for retirement, depending on how your program wants to be structured or how much you want to put in there on a regular basis, contact me. And if it did provide value from what you've heard so far, make sure you give me a like so YouTube will know I'm putting out quality content and benefiting you. Be the first to share this on social networking, and don't forget to subscribe and hit the bell so you'll be reminded every week on when I have uploaded new videos. God bless and have a great day.